Hello, everyone. This is Charlie TM GuruFocus, and I'm very glad to see you again. Hope you are doing well. And say hello to me if you hear me, so that I will know that you hear me. And tap in the chat area, and so that I will know that you are there and listening to me. Hello, everyone. This is Charlie TM. Okay. Sorry about that. I mute my monitor and other computer. And yeah, and time goes fast. And it's a second month already. And last month in January, we experienced a lot. And looks like things are coming down, at least from this week. And I will share some of my recent thoughts today, mainly. Of course, if you have questions, please also ask me. Feel free to ask me, and I will answer the questions as best as I can. First, I will share my screen. Let me share my screen here. Okay. Okay, today's February 3rd is a user engagement meeting, and things I will talk about, I will share. First, I will talk about what my thoughts on value investing, and then I will share some gurus that did extremely well in the last few years. And then I will share some thoughts on value versus growth and where the investing direction should be going, or at least what I thought should be going for the next few years. And probably you read an article from Howard Marks, and I think lots of value investors are thinking about value and the growth these days. And we all know that the growing growth companies has been doing very well over the past few years. Companies like Tesla, Zoom, and Netflix, they all produced great returns for investors. And so there are lots of thoughts. And Howard Marks, he wrote his memo last month, sharing his thoughts on value and growth. He's saying that the distinguished value growth actually shouldn't be that much, and value investors can also invest in growing companies. And if we separate if we think about this investing style, and I think there's such a spectrum, and the valuation, there's the two extremes or two sides of the two things that are important. One is valuation, the other is growth. And some investing styles, like we always did before, mostly value investors think about valuation and think that valuation is the most important thing. But the valuation also mainly think about the assets, especially the traditional value investors. And they don't think too much about the future growth or even business operations, but the valuation relative to assets are very important. That's a traditional value investor. And last few years, the growing companies, high growth companies has been doing extremely well. The high growth company investors, they focus on future. They don't think about too much about current profitability or cash flow. They think more about the future, and they think more about the future, not only the companies, but also the future of the whole industry. And I think they are at this side of the spectrum. And of course, there are people in between, and people in between, they do want growth, but they want the growth that are profitable and cash flow positive and generate, and also and can be bought at reasonable price. And that's called GARP. So growth at reasonable price. These people, they like growth, but they want reasonable price. And the valuation people, the traditional investment people, they only care about valuation, especially relative to the assets. And the growth people, they care about the growth rates only. They don't even care very much about the current valuation. If you think of the investors who are buying Zoom or Tesla, they don't really care about the current valuation, current company valuation relative to their what they earn this year, but they mostly think about the future. And if we think about the investors, the gurus, if you think the first group, I would say Ben Graham, he belongs to this group, the father of value investing, and he pays all his attention to valuation, don't care very much about the business actually. And Warren Buffett in the earlier years was also like this. And he bought lots of cigar butt companies. And Walter Schloss, that's a student of Ben Graham, and he also is a deep value investor. And just pay attention to the valuation, did produced very good returns. And current active investors, including Prime Vasa, Francis Cho, and I think they belong to this group. And also Bruce Berkshire, the Morningstar investor, my fund manager of the decade 10 years ago, the last decade, previous decade, he belongs to this group, or Eddie Lambert. They all belong to this group. They buy companies that are valued cheap relative to their assets. And the companies they think like Sears, that's why Eddie Lambert and Bruce Berkshire, they invest in Sears, because they saw that valuation of the business is much lower than the assets that company owns. Or BlackBerry, they talk about the value of the patents, not the future growth of the BlackBerry. Then the second group, I would say the growth at a reasonable price. I would say Warren Buffett is one of them. Charlie Munger belongs to this group too. Peter Lynch, even Peter Lynch, we know he's a growth investor. He belongs to this group. Chuck Ecker, an excellent fund manager, he belongs to this group. Don Yakman, Bill Nagrin, and Tom Russell, they all belong to this group. And then if you think of the companies, Google, Facebook, and a company ANSYS, that a company I like actually, one of my largest holdings, ANSYS, it belongs to this group. These companies, they produce very good, very big earnings, cash flows from their business, and their valuation is maybe a little bit expensive now, but still reasonable compared with this group. And this group of investors, of course, the very popular, very hot manager, popular fund manager, Kathy Wood, and also Ron Barron. He's one of our gurus, and they like to invest in this group. Also, very well-known name in UK, Bailey Graffle, I think the company called. They invest heavily in this group. The companies you think it would be like Tesla, Zoom, QuantumScape, belong to this group now. Of course, for companies, they can be at different stage. Even the same company can be a different group. Many years ago, probably Facebook belongs to this group, but now it shifts to this group. And we know that value has not been doing very well. And the growing hyper growth companies, the stock has been doing extremely well. And value has been underperforming growth for the last 10 years, actually in this bull market, in this longest bull market ever. And for this chart, if the line is above the zero line, above is positive, it means value is outperforming. If it's negative, means growth is outperforming. So for the last 10 years, growth has been outperforming tremendously. But the previous decade, in year 2000 to 2007, value has been outperforming So value did have its days before. And if you go back another decade, in end of 1990s, the growth was doing extremely well. Mostly growth was doing well in the 1990s. Then in the 1980s, value was doing extremely well. And from this sharing, I want you to think about that actually. Do you see something? Maybe there's a cycle here. So cycle. What I observe is a cycle with a period about 20 years. Value has 10 years, then growth has another 10 years, and value has 10 years, and growth has another 10 years. And now the growth has been outperforming in similar degree as it was 20 years ago at the peak of the dot-com bubble. And where things will go, I will discuss a little bit more here at later. So after I talk about this, I want to share it with you. So no matter which style you are, and we have screeners that can cover your requirement, your needs. And let me share my screener here. Okay, if I go to GuruFocus all-in-one screener here, if we want the companies that are traded at deep valuations, so deep value investors, the screener you can use as actually, we have a Ben Graham net screener here. It's under value screens here. And if you just come to Ben Graham net screener, you will find companies that are traded at below their net working capital valuation or below their net current asset valuation. You can find the list is getting very short these days, but you can find them here. Or you can use all-in-one screener, and a very straightforward way is come to the valuation ratio tab. We have a filter called price to gram number here, stock price to gram number. If you set this ratio, the max to 1, so you will find companies that are traded at below the gram number valuation. The gram number is actually a very conservative valuation. It doesn't consider the growth part of the company at all. It's mainly the current earning power and the book value. The relationship is from there. So it's a very conservative valuation. You can find quite some companies there, although many of them are traded at pink sheet. If you want the ones, you don't want the ones that are traded pink sheet or OTC, you can just use is OTC stocks, and you can uncheck, you can check no here, and you will find that companies that are traded below gram number, but not traded on OTC. So that's where you can find these companies. And that's the first group. If I come back, that's the first group, companies that are traded at deep valuation. The companies that Ben Graham would invest. And the next group is a GARP. The GARP companies that are traded at reasonable valuation but growing. We have also our all-in-one screener. You can go there easily. There are some companies, screeners I created before, like the high quality and low capex. These are the high quality and low capex requirement companies. And if you go there, just actually by going under screener here and high quality, low capex link here, you come to the companies. Actually, interestingly, the first one is ANSYS. I mentioned before. Actually, I found this company from this screen, and I personally belong to this group. I personally belong to this high quality, low capex investing group, the GARP investing group. And you can find those companies by going to screeners and high quality low capex here. Some interesting, actually, some familiar names. Familiar names. Another one, for instance, like Monster Beverage, and some semiconductor companies, and also Fastnell. And this company has been doing extremely well. Facebook belongs to here too, and Google belongs to here too. I personally own Google. I actually also a relatively large position in Google, and I own most, actually, among this list, I own a lot of them. That's where I found mostly my investing ideas. Okay, the third group is hyper growth companies, and this group of companies have been doing extremely well over the past 3 years. Especially past 12 months, and like Tesla gained 800% over the past 12 months. Zoom and all the hot names like Shopify, all these companies belong to this group. And for this group of investors, they don't care very much about the current profitability, but they think more about the future perspective, the future of the company, especially the industry. And most of the current new investors, like the investors on Robinhood or some young investors, they never experienced a market crash, long market crash. They are mostly in this group, and you can find this group companies in our all-in-one screener too. I will show you if you're interested. Okay, if I clear this in clear my screener, it has nothing to do. It has no filter selected. And actually, because we want growth, growth is the most important thing here. And just to limit, if I want find, actually, okay, because we want growth, we use this one, the historical data screener of sales. I just click on here, this cross here, the historical data screener. I come here. If I want companies that over the past 5 years the revenue grow at least 35%. So I put a 35 here. And so the equation is listed here, and the companies already appeared here. So actually, I found 42 of them, 42 companies over the past 5 years, every year over year, grow their revenue at least 35%. And I got 42 companies here. And yeah, that's actually very, very easy to find. Very easy to find. Yeah, I found Shopify Inc. here. And that's Atlassian is a software platform that we use sometimes. Okay, we want to see the industry. I want to see what kind of industry. If I just turn on the industry display, okay, you can see lots of biotech companies, drug manufacturers, and beverage. That's interesting. I didn't know that actually. That can be interesting. Beverage company that has been growing every year by more than 35%. Transportation company, a real estate company, a software company. That's quite interesting, actually. And just out of curiosity, I want to see how their stock do. Let's see this software company, the software company team, the symbol is team. I just click on it and come to the stock of team. Let's see how the stock did. Yeah, the stock did really well. If we look at here, the stock did extremely well. If I come to the interactive chart, of ticker team, And the stock when IPO in 2016 at a price about 27. The current price is about 246. So it gained about 9 times. Gained eight times over the past 5 years. And that's tremendous growth. Let's try another one. So it was a software company, and I saw a beverage company. That's really interesting for value investors. And I saw a beverage company. Wow, the stock. Wow, this did even better. Okay, it went IPO much earlier, but it kind of crashed during the financial crisis. But from 2013, if you look at the last 10 years, in 2013, it was traded at 27 cents. And today it's $59. The stock gained more than 200 times over the past 10 years. So this can be a very powerful screener for the company, for the investors who want to have companies that are growing, that has fast growth. And actually, it's very easy to do. You just select the cells and use a historical data screener. I click it up here and select the years you want to grow, and then the rate you want to grow, and it will filter the companies that satisfy your needs. And that's actually, from here you can find some very fast growing companies. And here, okay, yeah, that's something I want to share about screener. You can find any companies you need, as long as based on fundamental. You can use our all-in-one screener to find those companies. And also now I come back to the gurus. The gurus that actually, because of the value style or even slower growing company has not been growing so fast. The stock has not been doing so well. So lots of our gurus underperformed, like Warren Buffett, and he bought Wells Fargo. I would say that was his biggest mistake ever. He started buying Wells Fargo in 1990s, and he held it for almost 30 years, and the stock actually didn't do much over the last 20 years. And he lost money on airline stocks. So Warren Buffett has been underperforming. So Berkshire Hathaway stock has been underperforming in this time when the value is underperforming. And some of the well-known investors, the gurus, has been underperforming too, like Bruce Berkshire, as I mentioned him. He was a Morningstar Fund Manager of the Decade in 2010, and his assets under management gained to more than 20 billion actually at that time. But then he has been underperforming over the past 10 years, and currently his asset under management is less than 1 billion. The market has been very brutal. If you underperform, the money will be gone quickly. Same thing happened to David Einhorn. David Einhorn used to be a top investor in Wall Street, and but since he shorted Tesla, and it has not been working to his favor. His asset under management also declined to around $1 billion. But we do have gurus that has been doing well. The first one, Chuck Acker, I want to highlight, is a great investor. He invests in companies that has good growth, but at a reasonable valuation. And quality is the first thing he focuses on. Quality is something he focuses on when he select companies. So he wants a company that's well managed and very profitable and grow. And I think in 2018, he spoke in our value investing conference as a keynote speaker, or either 2017 or 2018, I forgot. And I was very inspired by him. Something I remember still today. He said, good experience is from, sorry, he said this, good judgment is from experience, and experience is from bad judgment. That's something I liked, actually. So good judgment is from experience, and experience was from bad judgment. So everyone has a learning process, and we're all learning all the time. And another investor I want to highlight is Ron Barron. I would say he's a growth-focused investor. One of his largest position is Tesla. So not surprisingly, and over the last year, 2020, his fund growth more than 148%. That's really very good performance for 1 year. And over the past 10 years, his fund averaged 23%. That's great performance. And if you want growth idea, you can look at Ron Barron's portfolio. Okay, here I'll bring you to Ron Barron's portfolio. If I type Ron Barron, yeah, okay, I found here. Ron Barron stocks. If I click on the current portfolio and I sort from the top to bottom, you can see his largest holding is what? His largest holding is Tesla. So Tesla is the largest holding by far, almost weigh 10%. And he owns more than 300 companies in his portfolio, but Tesla is more than 10%. If you want growth companies, you can look into his portfolio. He has been doing really well, much better than everyone else. Another fund Guru has been doing well, Frank Sands. His fund grew 71%, and he actually focused a lot on growth companies too. Now, let's go back to this chart. As I mentioned that value has been underperforming over the past 12 years, underperforming even more over the past 3 years. The patterns, to me, it's actually very similar to what happened in the 1990s. The growth has been outperforming so much. Growth company has been doing so well. And the pattern actually very similar to it was in the 1990s. Will the next 10 years be different? Will the next 10 years be similar to the first decade of this century, year 2000 to 2010? And I will personally, I think with the growth at so much valuation, so rich valuation, and I would put my portfolio, I will shift my portfolio some at least to this here, to the valuation, more undervalued companies. And I will show you here where to find them. We all know the current market valuation is very overvalued, as indicated by Buffett indicator or Shiller PE. If you don't know where to find those, the Buffett indicator is actually under market. Buffett indicator, you just select Buffett indicator here, says the market is significantly overvalued. The next 10 year will likely return a negative return for the next 10 years if it revert to the mean. And Shiller PE also is telling us same thing. The market is, Shiller PE is 37% overvalued, and the future market return is, implied market return is close to zero. So with market is overvalued, but the growing company is even more richly valued. And value has been underperforming. So maybe we want to shift some of our money into the value portion of the investing spectrum. So where can we find the relatively low valuation area? So one place you can go is a industry overview here. It's also under market under the Buffett indicator link. It's called industry overview. If I click on that, here you will see the valuation of different industries. These are the trading PE ratio of different industries, and that's where I want to look. And among this industry here, you can see all the industries here, different industries, their PE ratio. If I sort with PE ratio here, I found the companies that are sorted with lowest PE to highest PE. And within this industry, I would try to find the ones that are not that cyclical. For instance, the first one I look is insurance, the insurance industry. And if I come here, insurance industry page, I can see the companies. First one is Berkshire Hathaway. Berkshire Hathaway is actually valued at reasonable PE ratio, and the price book ratio is also not that high. If I sort this one with PE ratio, interesting, some life insurance companies or health insurance companies, they are all valued at quite low valuations. And I think that's something we can consider. Next area I will say is if I go here, okay, tobacco products. Maybe not everyone likes them, but I just want to point out the tobacco companies, Philip Morris, Altria, and they are traded at quite reasonable P ratios. And something to highlight is their dividend. Their dividend is very high. The dividend yield is 8%, 6%. That's really high. That's really high, even for them, for the tobacco companies themselves. And another area I will see if I come to the sector, back to the sector. Another area, maybe the healthcare companies. The industry has a P ratio of 17. If I come here, and there are some familiar names, United Healthcare, P ratio 21. If I sort it, and Humana, P ratio is only 12. The growth seems to be reasonable. The growth is probably around 10%. Yeah, that's an area I think we should start to pay attention to, because over the past 3 years, everyone is thinking about growth, and now maybe it's close to a point where we should think more about the matured companies with reasonable growth but relatively low valuation. I think at least these companies will do well if there is a market correction or market crash. They should be more resilient to those. Okay, now that's what I want to share for some of the thoughts, and now I will about the matured companies with reasonable growth but now I will answer questions, and I will. Okay. Okay. Now, I want to. Warren. He is our long-term member and always come to our conference. He mentioned about the chart. Yes, we added a performance chart. It's on the summary page of all the stocks. If you come to the summary page, go to any stock. Actually, if I just I start over. Any companies if I think of, okay, Tesla, just let's mention, we'll talk about it. Tesla's summary page. And at this lower area, we added a performance chart. the stock performance chart. Yeah, it's called performance. It takes a little bit to load because my computer is busy sharing the videos. But you can see the performance chart of Tesla stock. It's devoted at 10-year or the maximum time if it's less than 10 years. If we click here, if I choose 5 years or 1 year, yeah, you can see the Tesla compare with its competitors' performance. Tesla compare with GM or G or today. There should be 1 to date. Yeah, this 1 year is wrong. It should be 12 months. It's not 1 year. We'll correct it. Okay, the 5-year performance, Tesla of course did much better than the others. You can also add other companies here, and we have GM, we have Ford, but you can add any companies there. You can add Apple here. You can add there, and it will add, yeah, Apple's here. It will add to the chart and telling it will also tell you the performance of each stock over the past 5 years. Yeah, you can select different time period. We want to use this to actually, okay, this lower area also tell you the performance at different time. Whenever you add a stock, it's added to the table also. 1 week, 1 month, Tesla, GM, and 3 months. Okay, Tesla 6 months, YTD, and 1 year, 12 months. Tesla, of course, did much better. And also the yearly returns, the returns of stock at different years. Yeah, and seems to be a useful feature, and it was requested by some of our users. Okay, and Warren is saying that Warren Buffett bought Merck. Let's check. Yes, Warren Buffett bought Berkshire Hathaway, actually bought Merck in the third quarter. And I personally think, actually, because of this position so small, I'm not sure it's bought by Warren Buffett. And you can see other drug makers too here. Also, actually, AbbVie and this Bristol Myers. There are 3 drug companies here, and also actually Pfizer. There are 4. All 4 were bought last quarter in the third quarter of 2020. And with this such diversified and low impact purchase, I really don't think it's bought by Warren Buffett. I would think it's bought by Warren Buffett's investors under him, like Todd Combs, I think Todd and Tom, yeah, and Tom Weschler, and probably by them. Of course, then you can look at the valuation of the companies here. Those companies, the drug companies, actually, they're all traded at a pretty reasonably low valuation. And if our GF value telling us that it's modestly undervalued, this is actually, if you think they bought these companies, this is actually close to my idea to shifting portfolio toward the relatively low valuation part of the industries or the investment spectrum. That's actually, I would say, it's similar to what I think. Of course, another one, T-Mobile, is also similar companies. Of course, Snowflake, it was from an IPO. It's not definitely, it's a faster growth company. Also, Helen is asking when short data will be back. The situation was that the short interest data was included in our original data licensing. But then after several years, NASDAQ and NYSE both contacted us, and they said they want to charge extra for the short interest data. And they not only want to charge extra, they want to charge a lot for those data. They want to charge really outrageous fees. And it was all included in our original data license without additional fees. And so it caused some pain for us. We may talk to them again. We actually talked to them many times, but their fee is actually outrageous. Okay, Chaw Bobby, thank you very much from Hong Kong. Okay, where can we find hedge fund gurus performance on Guru Screener? Actually, we don't have a lot of hedge fund performance. The reason is actually, even we are not allowed to publish them. The hedge fund performance data, even if we're not allowed, we have some, but we're not allowed to publish them. So that's why they do not exist in the screener. But you can find some information here. I think it's called Guru Scoreboard. It's called Scoreboard here. Yeah, we have some data. They may not, especially the performance data, and they may not be up to date for hedge funds. But for mutual funds, they are. You can find the performance here. You can sort by the performance numbers. David Tepper, he is actually, I think this data is probably not very new. But Chuck Ecker data is up to date. He had the greatest performance for last 10 years. This fund we track. Okay, and another question. Okay, Michael Philip is asking about GF value. And we don't want to talk too much about the detailed calculations. We really don't want to talk too much about it, about the calculation. And what we want to share is actually described there. And we do come up with a certain way of calculation. And we think that it's a reasonable valuation. Also, it can cover a broad range of companies. Now, like DCF can only cover the companies with predictable cash flows. But actually, most companies do not have predictable cash flow. And that's why we developed this GF valuation method. And we think that it's a very good way of doing valuation. And by the way, if you come to the all-in-one screener, you can filter with it. It's called GF value here. You can filter companies that are modestly undervalued or significantly undervalued or fair valued. You just choose those, and you will see the results come out. Of course, then you can add other filters. You want only bigger companies, or maybe you just want SP 500 companies, So you want certain industries only. So you can add a lot more parameters to it. Actually, some list from here is very interesting. If I just select those, I can see Boeing Company, Bank of America, Berkshire Hathaway, Citigroup, and Facebook, and Home Depot. They're all reasonably valued at this point. And yeah, that's something I think you can use, and that's what we want to share about the calculation part of the valuation, GF value. Can I add from to date to performance chart? And I don't think that's supported at this point, but I think we can always make that possible. I will talk with our developer to add that to the chart, so that you can choose the different from 2, 10. Okay, David has a comment. He believes that Warren Buffett bought those drug manufacturers. If it's bought by him, it will be similar to what he did with airline companies, diversified. But Warren Buffett usually does not do diversification, as far as I know. And of course, I agree that they seems to be undervalued at this point. Okay, and Preven saying, can we put Bill Miller back in the regular guru list? I don't even think we're tracking Bill Miller, but I will. I'm not sure, but I'm not 100% sure, but I will take a look. Okay, for Mana is asking for Guru real-time peak data. Real-time peak data is under here under Gurus. Guru and real-time peak data, you can see the trade date is much closer to today. Steve Cohen, the latest one was January 25th. It's from last week. So the delay is much smaller. For the actual, compare with the actual buy date, it's usually within a week, within 10 days. That's a requirement. Okay, and let me see. Ed has a question. Make line chart showing value versus growth performance available as it changes over time. We will consider it. I got this chart from a third party, but I will see if we can do that. I think most likely we can. We can use Russell value index and the difference between Russell 2000 value and 2000 growth index to compare. I think we should be able to. Okay, Ausher is asking about Texas Pacific Land Trust. I usually don't provide advices on different individual companies, but we can take a look at here. I remember this company, and it seems to be quite profitable, but it requires lots of capital. It requires lots of capital, and yeah, seems to be very profitable. Should you buy or sell? To me, it seems to be somewhat overvalued, but I really don't know this company very well to give you a suggestion immediately. How often GF value chart is updated? And actually, GF value chart is updated every day as the new data come in. As fundamental data comes within 24 hours, if the fundamental data is updated, GF value will be updated. And so, but of course, the price is moving all the time. The price will affect the conclusion about it's overvalued or it's undervalued. So it's actually very updated all the time. And WK asking, any Chinese-based newspaper published in China would you like or recommend to read for Western investors? Financial, yeah, that's actually a very good question. And I know some Chinese newspapers, but they are not like Barron's or Financial Times. There's a WeChat system. Some authors, they do write very well, but I don't think there's a newspaper like that. Yeah, Michael is asking if is it possible to filter all-in-one screener with price to GF value. I think it's available already. You can filter price, its undervaluation ratio. Yeah, here. It's the price to GF value. It's here. So you can choose a range that that you want, where the price to GF value is between the range, and you will get it. And of course, then you can come here to turn this on to GF valuation on. It tells you it's undervalued, or also we have a category called possible value trap. So not GF value ratio can be low, but it can also be value trap. Usually we think it's a value trap. The possibility of becoming a value trap is when the company, for instance, has declining revenue or has a very high level of debt. Or there's F score, they have very low F scores. F score, let's see, just as an example. And okay, we said AAMC is a possible possible value trap. If you look at here, yeah, the company has declining revenues like crazy, declining revenues and losing money. Although it's probably traded at a very low valuation, the stock went down so much, but it can be a value trap. So from the filter here, you need to be careful, really need to be careful. Sometimes it can be value trap. Okay. More questions. How do I find data SP500 preference or like PSP, PE, free cash flow? SP500. I think the closest one we have for SP500 is under the economic data here. SP500 indicators. There's a category called SP500 indicators. And SP. Okay. Here. Yeah, SP500 indicators. Here you can see the P ratio of SP500 index. That's the SP500 index. I think that's the closest one we have. And we don't have price to cash flow or price to sales for SP500 index. Institutional ownership. Can we find data which is faster than quarterly? I think institutional ownership is updated. If I remember clearly, yeah, it's updated once a month here. Yeah, institutional ownership. You can find it's under ownership tab of any stocks here. Unit ownership tab, and the data is updated monthly, not instead of quarterly. Okay, and Canadian Insider. Okay, I'll take a look at Canadian Insider. I will ask our data team to look at the Canadian Insider. I need to write it down. I will review this, and also use app more than website. Offshore thing, and I'm not sure actually. I'm not sure. I will take a look. I only use website mostly, actually, very rarely using the app. Okay, those are the questions I got. I don't see any further questions. If you still have questions, yeah, feel free to tap there. I will be very happy to answer. But some plans we are working on, and we're developing a distribution chart which shows like a statistics of the performance of all the stocks, and also the statistics of the valuation of the stock market, things like that. We will release it, and yeah, lots of things are working on, and we're kind of busy. Actually, our team is growing bigger and bigger. And if you read Chinese, maybe you can visit our Chinese website, gurufocus.cn also. And that's some features on GuruFocus.in we newly developed and not available on GuruFocus.com yet, but they will be moved to GuruFocus.com as well. Yeah, that's about what I have today. Seems like there's no more questions. And I thank you, everyone. Thank you all, and hope you have a great week and great month. And I will see you again in March. Bye.